Imagine someone handed you $10,000 today, but there was one condition. You had to invest it in only Fidelity index funds and leave it untouched for the next 10 years. Would your money double, triple, or barely grow at all? Today, we're putting $10,000 into 4 of Fidelity's most popular index funds to see which one could potentially create the biggest long-term wealth, and the results may surprise you. Most investors spend weeks trying to find the perfect stock, but research has shown that consistently investing in low-cost index funds has outperformed many active investors over the long run. The challenge isn't choosing between thousands of stocks, it's choosing the right fund. So let's compare 4 of Fidelity's most popular index funds. First up is FXIAX, the Fidelity 500 Index Fund. It tracks the S&P 500, giving you exposure to 500 of America's largest companies. Think Apple, Microsoft, Nvidia, Amazon, and many more. Historically, the S&P 500 has delivered around 10% annual returns over the long term, although future returns are never guaranteed. If that average continued, a $10,000 investment could grow to roughly $26,000 after 10 years. A simple fund, but one of the most powerful wealth-building tools ever created. Next is FSKAX. Instead of owning only large companies, this fund owns thousands of U.S. stocks, including large, mid, and small-cap businesses. That means broader diversification and exposure to more of the U.S. economy. Historically, its returns have been very similar to the S&P 500 over long periods. If you want to own nearly the entire U.S. stock market with one investment, FSKAX is hard to beat. Now let's talk about 1Q. This fund tracks the Nasdaq Composite, which has a heavier concentration in technology companies. Because of that, it has the potential for higher growth, but it can also experience larger swings during market downturns. If technology continues leading the market, 1Q could outperform broader index funds, but investors should be prepared for more volatility along the way. Finally, we have FNILX. This fund gives investors exposure to large U.S. companies while charging a 0 expense ratio. That's right, no management fee. Over decades, even small savings on fees can add up through compounding. For long-term investors, keeping more of your returns can make a meaningful difference. So which fund wins? If you're looking for a classic long-term investment, FXIAX remains one of the strongest choices. If you want maximum diversification, FSKAX is a compelling option. If you're bullish on technology, 1Q offers greater growth potential with greater risk. And if minimizing costs is your priority, FNILX stands out with its 0 expense ratio. The truth is, none of these funds are bad choices. The best one depends on your investing goals, your time horizon, and your risk tolerance. So if you had $10,000 to invest today, which Fidelity index fund would you choose? Let me know in the comments below. And remember, the growth estimates are for illustration only, assume roughly 10% annualized returns, and actual results will vary. Past performance does not guarantee future returns.